Hi, I'm John Stevenson, the Guaranteed Retirement Guy. Let's talk about how to make the most out of your annuity withdrawals after age 59 and a half. All right, so you're 59 and a half and you're thinking about taking withdrawals from your annuity. And you know that because you've reached 59 and a half, you're not going to have that dreaded 10% tax penalty that the IRS is going to levy if you take it before then. Now, of course, if it's a 401k, a lot of 401ks will have the 55 rule where basically you can withdraw money out of the 401k before you're 59 and a half and you're not subject to that rule or that penalty. But the fact is you can only take the money out of the 401k. You can't actually take the money from the 401k and put it into an IRA. So those are just for people that want to retire early and they want to take distributions from their 401k. And if it's an annuity, then great. I mean, you'll have that same benefit if you want to take it out at 55. But we're talking about 59 and a half. And most annuities are usually for retirement. And usually they're in an IRA or maybe even a non-qualified annuity, which non-qualified annuities, even though they're not in an IRA or maybe a Roth IRA, maybe you just purchased it with money from your brokerage account or from a CD or from a savings account. Because an annuity is a tax-deferred vehicle, it's still subject to the 59 and a half rule because it's tax-deferred. And so it may not be an IRA, but because it's an annuity and the earnings grow tax-deferred, if you take money out before 59 and a half, you're going to pay a 10% tax penalty. Okay? So how can you make the most of the 59 and a half rule? Well, if you put money into an annuity, let's say 5-10 years before 59 and a half, let's say you've got an old 401k, okay, from an old company, and you're thinking to yourself, hey, I would like to get an annuity contract that's going to give me a ton of income in 10 years. You can do that with an old 401k. You can transfer that from that 401k to an IRA, have an annuity contract inside of it, and now you want to make the most of those withdrawals at 59 and a half, and so you attach an income rider. The income rider, let's say that earns 7% compounded every single year for those 10 years. Well, at the end of those 10 years, you're going to have a lot of withdrawals, especially if you activate the income rider. You're going to have guaranteed income for life based off of that 7% growth rate during that 10 years. So that's going to be pretty big. And since you waited till 59 and a half, you don't have the 10% tax penalty. You have the guaranteed income, and then of course, if it's in an IRA, then it's just taxed as ordinary income. The nice thing is regardless of what happens with the balance, even if the balance goes down to zero, that income is guaranteed for the rest of your life. And if it's a Roth IRA, well, that is guaranteed for the rest of your life, tax-free. Okay, that is something also to think about. If you have a traditional IRA and you want to purchase an annuity, you can do that inside of that IRA. And then if you want to convert it to a Roth later on before taking income, you can do that. Okay, so that's important to remember because when people want guaranteed income, a lot of times they don't want Uncle Sam dipping his hands into it. And so that is the way to do it. So I hope that helps. It's important to wait till 59 and a half to avoid that tax penalty, even with the non-qualified. So you got to remember that. A lot of times people feel like, well, if it's non-qualified, I'm not going to have that tax penalty. Unfortunately, because it is a tax-deferred vehicle, that is just the way the IRS would treat a non-qualified annuity. But that is the way to maximize the amount of money that you can take out. Now, here's the thing though. If you don't need the income at 59 and a half, wait. Okay, wait till you're 60. Wait till you're 65. Because if you do that, you're going to have that income benefit grow much longer and you're going to take out a lot more guaranteed income. Now, if you need the income right then and you decide to retire early, then great. That's great too. But just keep in mind, if you don't need it and you're thinking, hey, I'd like to maximize what I can take out after 59 and a half, that's how you do it. You let that accumulate a little bit longer. And regardless of what the index is doing, if you have an income rider attached and that's earning 7% compounded, that's going to be very, very valuable in those additional 5 years, let's say. And so that is really the best way, in my opinion, to maximize what you can take out after that age is just allow for as much compounded growth as possible so that when you do activate that income stream, it is going to be as high as possible for you. All right, if you need help with that, if you've got further questions about annuities and you're looking for the highest payouts, you'll notice there is a link below this video and it goes directly to my calendar. And we can chat about your personal situation, what you're looking for, and happy to answer your questions. So again, thanks for watching, and we'll see you next time.